There's this phrase, I think it's from one of the Seeking Alpha writers that I still read. Not that I'm subscribed to many. I think it's Tyler Durden or something like this. Anyway, his phrase, and it's completely correct. A bull market is where you check your stocks every day, and a bear market is where it's so bad you stop logging in. And I think a lot of people can relate to that. I think everyone at some point can relate to that, and we can relate to it right now. Those that are in the minors, at least exclusively in the minors, then it's not the best time whilst everyone else is making lots of money in Bitcoin and Nvidia, just playing the mainstream trend, whilst we're trying to be sneaky, value buyers, contrarians, whatever you want to call us. And in the end, it's not really paying too much dividend at the moment. Anyway, in this video, I'm just going to cover just the DXY gold, silver miners. That's it. It's one of those videos. And then the next one, I'm going to cover just the portfolio holdings. That way it's, a bit shorter. And I just want to make them more precise, although I have wasted about 1 minute. So with that being said, let's check the DXY. Obviously, the DXY has been up overall. But, look at this little support line here. Once we close below this, then maybe we can start getting, looking forward to a bit of a move down to 103. That should obviously be support. To be honest, this is pretty bullish. I mean, look, remember, we've come from a big drop, a fake out, came all the way up. Then we retraced because, the rate hikes. I mean, this entire move here was, rate hikes continuing. And then it was, actually, rate hikes are over. And now we've got a bounce because, to be honest, you can't just go down in a straight line. And this is one of those midway points that I was talking about because it was supposed to be 6 hikes. Now it's 3. So I think we're in the middle of the zone, between the high and the low. And what happens next? To be honest, this is slightly bullish because, we've gone up higher than we did before. We obviously hit resistance, and this resistance was correct. I had another one around here, but we went straight through there, so I deleted that one. But this one is obviously correct. Look at the high up here, 104.5 or 6, 104.6, let's call it. And then we retrace back to the breakout zone. So if we have a daily close below 103 point, whatever this is, 95, then maybe we can go down here, but we'll probably bounce from there. Then it starts to look a little bearish, But otherwise, if we start to close above 104.6, up we go. And where do we go? Hard to tell. I think around here, let's say we're going for 106. That's probably where you're going to go to. So there you go. Those are the 4 levels to watch out for. In the immediate term, you've got this one, this 103.95, whatever it is if you zoom in. Then up here on the top side, we've got 104.6. And then on the downside, if we actually close below this one, we have 103. And on the upside, we have 106. Pretty clear, right? But DXY overall slightly bullish. Now let's look at yields. Yields. Okay, the 1 year is not too relevant, but you can see turning up, right? We've got a double bottom. It looks like we're going to aim for this. Or close up here and up we go. I don't know how high we'll go. I don't know. But the 1 year is not too relevant. The 2 year is. The 2 year, we've closed outside the descending, and we're starting to test, and we're 1 day away, possibly Monday, from closing above this little zone here. Let's call it 4.5%. So if you close above 4.5% on the 2 year, honestly, we're going up. We're going up, and that will match the DXY well. This is not good stuff for the miners, but if you're like me and you got cash on the sidelines and we depressed this much, fuck it, let it come, fine. Let's destroy us even more. The one thing you can look forward to now is buying extremely cheap, these extremely good stocks. So I'm just like, all right, and this week I didn't add any. I'm actually doing a bit of a transfer of accounts at the same time. But to be honest, I bought the zone, the holdings that I have already at the level that they're supposed to be. That, a bit lighter than they should be, but they're still within this range that I want to allocate. So they're not cheap enough. They're cheap, but the holdings are not light enough, let's say, for me to want to go in even more. So those 2 reasons, the transfer that's still in progress, and the fact that the stocks that holdings value is still not low enough, means I haven't added. So this would definitely lead to another tranche in the best stocks. But I'll get to that with my portfolio holdings. But anyway, the 2 year up here, 4.5%, a move up definitely is possible. I mean, we've closed outside the descending and this horizontal. If we were to move back down, and honestly, a close below this level here, the low of this candle, then it can maybe come back down here. I don't see that happening though. 5-year, same as the 2-year, maybe even more advanced. Up we go, maybe to around here, right? Something like this. I could be off by a bit, but I think the direction is up. This one's already underway. You know, we've closed above this horizontal. The descending was breached a long time ago. 10-year, and now it's not as strong, you could say, but it doesn't really matter. The trend is still up. Look at this higher low on the double bottom, a close above this here, this 4.2, and up we go. I don't know how high. It's quite hard to call. I think the 2-year or maybe the 30-year, the 2 and the 30 might be easier to read, but the 10-year, a close above 4.2 and up we go. The 30-year, yeah, this one's 4.42-ish, whatever the high is up here, the actual high of day of this one here, a close above that and up we go. Where to? I don't know. Maybe 4.8, because we've cleared this high from all the way back here, you know, unlike the 10-year, we haven't really done that yet. So the 30 is stronger than the 10. I think it's really the 30 and the 2-year that you watch. But overall, up. You know, a few of them still have to close and breach the next trend line, but otherwise, I don't want to say clear skies, but you've got a bit of a level up move. And this is probably 4.8%. Let me just throw that in there. I don't know, something like this, maybe just before. But up, 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 up. General trend, right? Pretty simple. Some of them more advanced than others. Some of them have taken out trend lines. Some of them haven't. But the yields look like they want to go up. I know you hate to hear this. At this point, because of how low everything is, and I've got sidelines, let it happen. You know, let's look forward to something. And this one here also, DXY up. And you know, people think, and for good reason, they think, all right, yields go down. If interest rates go down and they print money, gold goes up. But to be honest, there are some occasions where it happens in the opposite. I feel like a lot of these rate cuts are priced in. What happens when the rate cuts happen? What happens when the first of them happen and the next 2 or 3 are expected? Because the market knows already. Or maybe the market starts to tank then. It's like, okay, we were looking forward to this because the market is so forward looking that maybe all of this move in the market is just crazy. I'm not going to show you the S&P and the Nasdaq. It's just straight up. The Nvidia stock is just absurd. And yes, I am still short at 600. Underwater, it's now 721 on my first tranche of Nvidia after reshorting, covering, but that's a different story. The point is, the market has just gone vertically up. So maybe when the rate cuts happen, it starts to tank. It's like, you know, buy the rumor, sell the fact. The fact is now rate cuts are happening. They announce it whenever this is in the next few months. And then down it goes. It's like, all right, what's next? And maybe for that reason, gold switches. It goes up. Like, yes, the rate cut, I don't know. Sometimes I just think everything's so inverse that that's something to consider. And, you know, market going down, hopefully miners go up. Because that's the one thing that could really explain this totally inverse symmetry where the miners are just below COVID levels for some of them, when you've got everything going for it, geopolitics, inflation, right? Inflation being high, that should be send it up. Interest rate cuts starting to be priced in, that should send it up, but it's the opposite. Maybe the market is just you know, maybe in opposite mode because of its forward lookings, buy the rumor, sell the fact. I don't know. Okay, so that's the dollar and yields. Summary is they're going up. They look like they still want to go up. Let's look at gold, silver, and then the miners real quick, and then I'll do my portfolio update. So gold, you know, down day, yes, the dollar and yields have gone up, but it was just 0.5%, nothing crazy. We're still above 2,000. This is not incredibly bearish. It's not bullish, you know, especially that Friday candle, but it's just middle of the range. You know, we retest this descending. I want to remove it, but it's still, I can remove it. You know, as long as we hold above 2,000, it's not bearish. That's the truth. If we were to close below 2,000, then you'd expect it really should cascade down to 1975 or whatever. And then you should bounce. But gold is not bullish, not bearish. It's just sideways above 2,000. You know, until we close above 2060, there's nothing. I mean, you can get a bit excited if you're, you know, testing 2050. But $30 moves, not the biggest move in gold, given how high it is already, 2,000. So it's not the biggest percentage move, but 2060 close, you can get excited. And I think it will go, you know, 2080 and then 21, whatever. And then the miners, I'm sorry, but the margin, something else I need to talk about. But yeah, I heard there was a video, an interview, I think it was the Fortuna guy. I forgot which channel. And he just mentioned something that maybe I should have known, but all-in sustaining cost of miners, you know, during the 2011, go on, let's I'm freestyling this one a bit, but you know, during this big move up here, this crazy one, 20, maybe GDX is better actually for this one. I think it has more data. Yeah, look at 2010, 2011. Look how high up we go. And maybe even gold and silver will show it also. Yeah, look at this crazy move. And the miners obviously moved a lot. If you look at individual stocks, you'll really see it, you know, Newmont or something. But the point is, the all-in sustaining cost was what it is. But now, today, this Fortuna guy said that you kind of need gold between 3,000, 3,500 to get the type of all-in sustaining cost that miners were under during this period. And that's because inflation, ironically, is impacting the miners, and they're not getting the reward with the price in gold being reflected correctly. So actually the cost of mining is, and we know this obviously, but cost of mining is pretty high. So their margins are pretty weak at the moment. You know, gold isn't high enough to compensate. So once you get gold at 3,000, 3,500 is what this guy said, then you can start to see the type of crazy move and the valuations in the miners that maybe some of us expect. So gold just isn't high enough for the miners to move. So maybe it really does take gold to go all the way up 2,150 and start to squeeze. And then you start to see this cascading into the miners sector that we all thought should already happen. Anyway, point is gold sideways at 2,000. Don't get excited until you're 2060. Don't get unbelievably pessimistic unless it's below 2,000. And then I think the levels I have here are all correct. Why would they change? We haven't breached any. Silver, you know, silver surprisingly strong. You'd expect gold, silver to be down when gold's down 0.5% on Friday, but it was actually unchanged, actually up a little bit. This descending again, it's bouncing off it. I think I can remove it now because we're so close to this support zone. If you were to retest it, you're probably going to be under the support zone. So it would bounce here before. So here's what we've got. It's just sideways, not bearish until you're below this 2190, let's call it, and not bullish until you're above this one here, because we haven't gone above this one. We haven't closed on a daily candle above this 23.3 in, I don't know what that is, 2-3 weeks. So those are your levels, those two horizontals. By the way, below here, we should get strong support. Let's see why. Very strong ascending. You know, it's hit 2 or 3 pivot points over a long period, so that's credible. But you know, even if we were to flush it, I think you're going to have some acting like a bit like natural gas, like some stop loss trigger hunts and all this stuff. And I'd be surprised if it doesn't just bounce back up the next day. But silver is still doing okay sideways, and don't get too pessimistic if you're not below here, and don't get too optimistic until you close above here. Finally, the miners, the worst will last. First of all, look at this bounce off here. Absolutely beautiful technical stuff. Not that difficult to imagine. It was the low from here. So this line works, at least for the GDXJ. Just lower lows, lower highs. There wasn't even really a high. And, you know, gold is just hovering sideways. It's the worst combination. You know, what did I say in my past videos? And it's obviously true. Those who are owning miners, what you really want to see is the metals go down and the miners not go down or go sideways or even go up. That's the best. You know, you're making money in the holdings of your miners whilst the underlying metal's going down. Imagine how good it is when it goes up. In this case, it's the opposite. The metals are not going down, but your miners are going down. So imagine when the metals actually go down. And I'm at the stage where I feel like, let it happen. Let the crash happen. Let's pick up the absolute bottom. That's the one thing we can look forward to. At some point, it reverses. And if you can pick the bottom well, and no one picks the bottom, but if you can sort of trance your way into it and get a nice bounce with a decent amount, you can make up for, you know, weeks of drops. And by the time it comes back up to somewhere like here, you could be, you know, with the value of your portfolio could be as it was when it was up here. So make sure you get the right stocks at the right time, and hopefully you've got some cash on the sidelines like me. I still got 30%. In fact, I think my 30%, maybe even more, it might be 35%, even though I haven't done anything, because the value of my portfolio has gone down. Because the cash has stayed the same, the representation is stronger. So I mean, it's not the best thing that your value overall of your portfolio goes down, but coincidentally your sidelines becomes, as a representation in percentage terms, stronger, you know. So I got about 30-35% now in cash. And as we descend, I'm going to try and layer in, but I'll go over my portfolio video for that to show you which stocks I'm thinking about going in and where I would. At the moment, I haven't, and I'm quite happy because we've just dropped. I do my weekly Excel. I just update the value of everything, and I can see that the price of the miners have actually gone down and my shares have stayed the same. So that's a way of being sure that I haven't added, because sometimes you can't remember what you've done in the week. But there you go, GDXJ, we've touched this low. If we close below it, I'd expect us to keep going. Obviously, what's happening in gold and silver would be relevant, the yields and the dollar, but at the moment it's very weak. So the trend is your friend, the trend is down. A close below 32.50, we're probably going to keep going down. The next obvious support is here, just because this low here. But I shouldn't have the line starting there because it suggests that it's relevant. That's not really relevant. It's only here. That's quite a move. I don't see that happening, from 32.50, that's 5% more. Maybe it stops off in between, and then you probably have to look at gold, silver, or the dollar. But look at GDX. It kind of did close around that level. You could say it's even breached it already, thereabouts. Because I know what GDXJ looks like, I'm going to just give it the benefit of the doubt and say that we're still within this trend line, because roughly it is. But yeah, if we keep going down and closing lower, especially lower than this candle, Friday's low, we will go down towards this area. Finally, SILJ, and I haven't even looked at the way up. That's how bearish I am. I haven't even looked at top side resistance. SILJ, wow, this one did close below it. But it rallied like the others. This is obviously the next support that's very identifiable. So this one is quite weak, and that's how it should be actually. It was relatively strong back here, remember, and look how far we've gone. On the upside, SILJ, I wouldn't get excited until you're up above here. Let's call it 8.7. Then you're clearly back within at least the clearest support zone, which would then be resistance. So if you can clear and close above resistance, maybe it will become support. So I wouldn't be excited until you're above 8.7 on SILJ, GDXJ. I don't know. Maybe this close above 33.8 would be better, but maybe let's see if we can at least get above, let's say 33.5, this zone, so we can say we're back within this channel. But really, above these two candles here, I think then you can say, okay, next move up is up here. I'm going to say that actually. I'm going to say 33.8. Don't be excited until you close above 33.8. And finally, GDX. Yeah, I think I'm gonna have to say the same. I have to be equal 27.8. I mean, once you're above here, you're kind of back within this channel, but really close above these two, then you can see, one or two or three candles away from here on the same week. So anyway, that's what I see in the immediate term, downside, upside, and that's me covering miners, dollar, yields, gold, silver, miners. Next video is the portfolio update, the beast one, which takes me an hour. It's absolutely exhausting, but I enjoy it. Even though these are bad times, I've got to stay faithful, do it for you guys. Hopefully you appreciate it. And this is the low point. It can go lower, but there comes a point where it turns. And if you nail the turn, it's all worth it. And then if we start to make new highs in gold, which I think we all agree will happen, this could be beautiful when we look back on these videos, or who cares about the videos, but we look back on this time and say, yeah, I survived that. All right, good luck, and I'll do my next video now.